Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw a breakout attempt and a move up towards the 77 to 78 area. But from there, ES returned and is now trading right at the top of the short-term balance area. So heading into the open, our short-term directional bias is going to be neutral. We are going to give buyers the benefit of the doubt as long as ES can hold above 66 to 68.5. But in order for the market to really maintain this overnight breakout and continue to go higher, or at the minimum retest the 76 to 78 initial resistance, we are going to want to see broad market strength, the other markets also participating in the move, and most importantly, we're going to need to see upside momentum. So off the open, just keep an eye on the NYC tick, make sure that we are seeing some decent values there, and then also look for the market to hold above 66 to 68.5. A failure at the initial support zone would mark a failed breakout attempt, and from there we could go down and retest the high volume node at 60.75, and then we have support at 57.5 to 59.5. Now, ideally, if the market is going to remain bullish, we don't see a move all the way down into 57.5 to 59.5. A failure to hold 60.75 would be a warning sign in and of itself, and by that point in time, the breakout would have already technically failed. So we will have to be cautious at the 57.5 to 59.5 zone, and then we have larger time frame support at 51.25 to 53.75, and that area can still hold. On the upside, the only hard resistance we have is at 76 to 78, which marks the overnight high. Beyond that, ES would be making fresh all-time highs, and there is no hard resistance. But given the recent volatility and the ranges that we've seen in the market, ES could be exhausted by the 83.25 to 84.75 zone, and definitely by 87 to 89. So really the game plan today is to keep the focus on the long side, but only if we are seeing those bullish signs in real time. Only if we are seeing upside in momentum, broad market strength. Now, as far as the advanced decline line goes, keep in mind that the previous close is at 68.25, so the AD line does not necessarily have to be extremely strong for the market to go higher, but it does need to be trending higher. So as long as it's in positive territory and trending higher, and then the momentum is still there, we can still actually go higher. So off the open, we are going to be using this 66 to 68.5 area as the short-term bull bear zone. As long as the market's holding this, there's potential for higher prices. If we fail here, then it marks a failed breakout, and we need to adjust our bias. And that's why the short-term directional bias today is still neutral, because we do have to be open to either scenario. It's just that as long as the initial support zone holds, we are going to be giving more weight to the buy side, and if it breaks, then we need to be more neutral and be more cautious on long setups, because from there we could just balance within a range. Or if we are seeing a lot of broad market weakness and downside momentum, then we could test 57.5 to 59.5 and possibly even break below that and test lower, although the range would definitely be quite exhausted by the time the market even gets down into 57.5 to 59.5. So those are the main thoughts heading into the open. Let's see how ES responds to initial support, whether the buyers can really maintain ES above initial support. That's really going to help set the bias and tone on the day, and we'll take it from there.